how to identify and draw supply and demand zones, and what are the common mistakes that I see traders making when drawing out these zones. That's what we are going to talk about today, so let's get straight into it. Now, the whole concept of supply and demand is to identify where the big money is buying and selling at, and we want to be trading with them. Now, if we understand that the big money, the institutions, whatever you want to call them, they move the market. They provide 99% of the liquidity and win consistently 99% of the time, while retail traders are consistently losing money. So if they are consistently making money, the big money, and retail traders are consistently losing money, we want to identify where they are buying and selling and trade with them. Now, how do we do that? Well, luckily they leave footprints on the chart, and we can identify these footprints by using the 4 supply and demand patterns that we trade. Let me show you guys what that looks like. So if we look at supply first, we are going to talk about the rally-based drop first. This is one of them. Price rallies up, it base, imbalance. Very strong move to the downside. That is a rally-based drop. The other supply pattern is known as the continuation pattern, which is a drop-base drop. And this is where you see prices dropping, and then at base, and then we have a very strong move down to the downside. This is where they were seeing the most value at price before. So when prices return back up into these areas, we want to be looking for buying or selling opportunities. And as for demand, prices drop, base, rally, right? Very strong move to the upside. That's the demand zone. And as for the other continuation pattern, we have a rally, base, rally. Very simple. Prices rally up, it bases, and then it rallies up. What do you notice that all 4 of these patterns have? Yes, they all have a base, right? Consisting of 50% candlesticks. But the most important and the main concept that people need to understand from this that I see a big mistake is they trade at poor quality zones. We want to have imbalances like this. And we will see the significant amount of buyers or sellers that came into the market by these leg out candlesticks. Look at that. Very strong move to the downside. For demand, very strong move to the upside, right? Demand, very strong move to the upside. And where's the other one? Why can't I find it? Over here, drop base drop with a very strong move to the downside. All right, the imbalance is always very big. So now before we get into the charts and we start drawing out the zones and I explain more into this concept, we need to talk about how to draw them. Very simple, very simple. There's no need to make them large or anything. We are looking for strong imbalances in the market, as that's where they are buying or selling at. And when it comes to drawing our zones, we have our proximal line and our distal line. For supply, our distal line goes to the top of the wicks, and for our proximal line, we get closest to the meat of the buy orders or sell orders of where price is left. In this case, very strong move to the downside started here, so we're getting closest to the meat of where the price is left that area. Same thing for demand. Prices drop, base, rally. We have our proximal line here, closest to the meat of where price is left in a strong fashion, as well as our distal line at the bottom of the wicks. I am not drawing my distal line here. That doesn't make any sense. All right, we don't cut through candlesticks here. Our distal line always has to be at the bottom for demand or at the top for supply, and our proximal line always needs to be closest to the meat of the imbalance of the leg out. All right, like I explained up here, they all have very strong imbalances. Notice how I'm drawing these proximal lines and distal lines, right? Distal lines at the top of the 50% candlesticks for supply, distal line at the top, proximal line at the meat of the order of where price is left, right? Where it originated from. Same thing over here, and same thing down here for demand. Proximal line closest to the meat, distal line at the bottom down here. Same thing for the rally-based rally. Okay, so let's get into the charts. Now, US 30s, let's look at this one first since I'm on it. Okay, so if we are looking at the 4-hour time frame, and this works for every time frame. You want to use the 1 minute, we can use the 1 minute. We will use the 1 minute. If you want to use the monthly, you can use the monthly, the weekly, the daily, the 4-hour, whatever. We're just going to use the 4-hour since we're here on it, but we will drop down to smaller time frames or larger time frames. Now, the first thing that we need to do when we get onto a chart, we need to identify where the big money is buying and selling. So to find demand, we just talked about those 4 supply and demand patterns, right? So we need to go down and to the left to find demand. In this case, right down here. Look at this very strong imbalance candlestick, right? Very strong move to the upside. We have basing down here. That is a drop base rally demand zone. So I'm going to mark my zone out like that. That's totally fine. All right, that is the next closest area of demand. Now for supply, we got to go starting with current price. We got to go above and to the left. All right, so we go above and to the left. Is this supply here, guys? Let me ask you, is this supply right here? Is this supply all right here? No. There is no base. Yes, there is leg out, but we want to go to the origin of where prices started this imbalance, right? Up here. And right there is where we have our rally-based drop supply zone. So when I go to my chart, as of what it currently is, these are my two zones. That's it. I want to be looking for selling opportunities up here, and I want to be looking for buying opportunities down here. Now, there are previous zones, like down here, proximal line across, drag it across. There are little supply zones out here. There are supply zones here, right? There's little supply zones over here. But what do you notice that all these zones have in common? They all have very strong imbalances to the downside. I'm not going off and drawing there's a really good supply zone up here. See that? Look at that imbalance. Hey, that's a really nice zone. That's one of the main mistakes that I see traders making. They don't trade at strong imbalances. We are identifying where the big money is coming into the market, so we want to be trading with them. Okay? These guys leave footprints in the market. Markets like, this is probably not the best one. Let me change the time frame to a 1 minute. Like this right here, this is perfect. See how it's just grinding up? Is there any strong imbalance? No. Prices are just grinding up. That's not really telling me that there's a significant amount of buyers that stepped into the market. So we wouldn't be drawing out any demand zones in here. This is a really good supply zone. I like this whole area. Really nice drop, base, drop area, right? Very nice imbalance. I like that. So those are really nice zones. Let's look at another market, shall we? Let's look at New Zealand USD. This is a chart that I was talking about. Oh, it's already marked up. Okay, well, we can talk about it, sure. Really nice supply zone up here, right? Rally, base, drop. My proximal line goes here to the meat of the orders, and my distal line goes above the wick. I am not drawing my zone out like this, like I see some people doing. That doesn't make any sense, okay? We want to get closest to the imbalance, which is up here, and that is where the supply took control, okay? A good exercise I like to tell people in my private group is, if they have problem identifying zones, I say, hey, take 10, 20 minutes and go through these tabs right here in our Discord chat. Go through the Forex pairs, go through the currencies, commodities. Don't look at what the top-down analysis is. Was it a winning trade or a losing trade? Look at how I am drawing my zones and why I am drawing out certain zones versus other zones. So if we look at here on natural gas, this is a weekly time frame. We go to the weekly time frame. Look, guys, drop, base, very strong rally to the upside. So that is a weekly demand zone that we can use on our charts. Okay, now this is set up to be a really good setup, but I'm not here to talk about my whole top-down analysis. If you guys want to hear more about that, I have a whole supply and demand tips playlist on my YouTube channel. If you go to my YouTube, click playlist, and then you will see this view full tips playlist. And there's a free little course for you guys, how to identify zones, draw zones, all really good videos for you guys to check out. And let's continue going through the charts. And if you guys are enjoying this, I really appreciate hitting that like button, subscribing, joining the channel. It really helps me grow this, and it lets me know that you enjoy this as well. So if you could take 10 seconds out of your day, 2 seconds, and just scroll down and like that, I appreciate that. Let's go back to that Discord, because I think those are great examples. Okay, why am I looking at coffee? All right. Drop, prices drop. Base, very strong rally to the upside. Drop, base, drop, supply zone. Notice how I'm drawing out these zones, right? I am not drawing my zones out like that. They're closest to the origin of the zone of where prices left, okay? If we look at gold, here is a gold chart. These zones worked extremely well, my gosh. So at the time, when I was looking at this chart, these are my zones that I wanted to draw out. Why? Drop, base, rally, very strong move to the upside. marking out my zone like that. Same thing with demand zones right here, and supply above price and to the left, right? Very strong move to the downside. That is letting me know that there are a lot of sellers came in. I am not going to go off and start drawing these little supply zones saying that's a really good zone. Look at the difference between this grinding down movement versus this supply, right? There's a massive difference, right? So we want to be trading at these type of zones. And if we go into the live markets of how prices performed since then, they worked out extremely well. We go to that 4-hour time frame, and there was that 4-hour supply up there that we talked about, right? Worked out extremely well. This demand zone held for a little bit. Maybe you can catch a lower time frame trade. And then this demand zone worked out really well down in here, right? Those are the 4 zones that we talked about. And now we got a new 4-hour zone down here. Breaking momentum, opposing zones removed. Like these are all little things. The imbalance of the leg out. Did it remove opposing zones? How far did prices leave? Is there a stay away candle letting us know that prices actually accepted the imbalance? There's a bunch of little things that I'm not going to get into now because this is opening a can of worms that I could talk about forever. But I have talked about them in these videos here, part 1, part 2, part 3, and other videos. So you guys will check that out down below. Let me give you guys a quiz. Let's go to, say, USD yen, and I want you guys to identify any zones that you see right here. This is a very easy one. All right, where would you see 30-minute supply zone? I hope nobody is talking about this area. You might have something here on the 30-minute, 15-minute here, already been tested, but if we're going to talk about fresh, our eyes want to go up here to the 30-minute. Look at that very strong imbalance to the downside, right? So I like that as a 30-minute supply zone. As for demand, I really don't see anything. So in this case, I would skip it and move on. So it's a very easy concept to understand. And if you guys don't fully understand it, like I said, those videos will really help you out. You guys can always reach out to me on social media for help. And I do have a free ebook for you guys for people that managed to complete the free masterclass that I have at moneyballtrading.com. That can be found in the description below, where you'll also learn, what are my top 3 tips, why 90% of the traders lose money, how to become a funded prop firm trader, what my tips are on that. So you can sign up for that below as well, and you'll get access to that ebook as well as other videos and interviews that I strongly recommend in talking about brokers. I mean, there's so much I could talk about, so that will be in the description below. If you guys have any questions about this video, let me know in the comments below. What's your experience with this strategy so far? If you have any questions, let me know. If you are confused about anything, just let me know. All right, I'm always here to help. You guys just got to start the conversation. All right, I'll see you guys soon. Thank you guys so much. Bye-bye.